Good afternoon, everyone. I warmly welcome all of you to the quarterly earnings call of Hemas Holdings PLC for the quarter ended 31st December 2023. With me here today, we have our Group Chief Executive Officer, Kasturi Wilson, Group Chief Financial Officer, Moisre Manji, Director Group Finance, Group Treasurer, Hazel Pereira, Head of Group Sustainability and Corporate Communications, Ishani Ranasinha. And we also have two members from our operations team. From the business, we have the Managing Director of FMCG segment, Sabrina Yusuf Ali, and also we have Dinesh Atapattu, Managing Director of Morrisons Limited. During the call today, we will be providing a little bit of an update about key macroeconomic parameters. Then we will discuss about industry performance, operational and financial highlights, strategies and priorities for the group, ESG initiatives, followed by a Q&A session. I'll focus on the implications of key economic parameters on Hemas. First of all, we saw some favorable shifts in the macroeconomic parameters. AWPLR came down by about 11 basis points during the quarter. We saw in December, the rates were in high 20s. And as we speak now, the rates are at around 11-12%. So this impacted positively to the group as we saw approximately over 50% reduction in finance cost in Q3 versus financial year last year, Q3. And also we saw some stability in exchange rates as well. The domestic currency appreciated by about 11% versus December 22 number. So there was a positive impact for some key BUs because of the stable exchange rates. And also we saw global commodity prices coming down from a year-on-year perspective. However, this benefit was partially negated by the domestic inflation. When we focus on the domestic inflation, CCPI and NCPI both increased by over 4% in December versus the 1% increase that we saw the preceding quarter. However, we have to make a note that this growth is coming from an already elevated base as December last year, the inflation was over 60%. Consumer spending was curtailed and their purchasing power was pressed because of tax reforms as well. The latest change being VAT rates increasing from 15% to 18%. And also we saw multiple adjustments to the electricity bill, increasing electricity tariff also. So this affected the group in two sides. On one side, the demand for all sectors remained pressured because of the lower consumer spending power. On the other side, operational costs increased across the group because of the domestic inflation. And of course, Sri Lanka is in the middle of an IMF program, and we were able to successfully complete the first review in December 2023. So Hazel, over to you.
So thanks, Durshi. So Sabrina, would you be able to give your views on how the HPC Sri Lanka segment has fared in terms of the market performance and any notable operational milestones we have achieved for this quarter?
Sure. Thanks, Hazel. So the categories didn't recover like we anticipated, largely because of the cost of living pressures to do with electricity, utilities, and fuel. However, I think the business performance gives us some cause for assurance. We were able to grow volumes by 6% ahead of the categories, largely driven by three strategies that we pursued. One is we continue to invest behind our power brands, particularly brands like Baby Sharami was a good example where we're still the market leader in the Baby Sharami segment, and we managed to strengthen its position in the market by 3 percentage points. Secondly, we also realized that the discount segment in the HPC market was growing exponentially. So we introduced and we innovated value engineered options at a price point that segment could afford. We introduced new brands like Goya soap, Diria, which is in the laundry segment, and Aya, which is a discounted sanitary napkin. And this also helped to boost volume growth in a consumption declining environment. Thirdly, we also focused on driving penetration in under-penetrated categories, particularly sanitary napkins, where we saw a double-digit growth and a 5% share increase in a 12-month period. Secondly, we also continue to stay focused on our long-term strategy to improve our competitiveness, particularly on the emerging portfolio of beauty and well-being. So these categories actually grew 30% year on year, and to date contribute to 28% of our incremental turnover. Just two examples, I think, worthwhile mentioning at this point. Vivia, which is a face care, masstige face care brand that we introduced 2 years ago based on heirloom rice, grew by 50%, largely on the back of more evolved formats, which are first movers in the market, like under eye gel and serums. Secondly, we also relaunched Kumarika, which is our hair care brand, improving the efficacy of the formulations and really utilizing Sri Lankan naturals and blending it with high performance hair care actives to deliver claimable level hair care products in the damage repair space. So those would be the three big themes we focused on. In terms of business performance, though, I think there's one other thing that we continue to be laser focused on, which is margin improvement. And we got our margins back up to pre-pandemic levels, largely on the back of mix improvement. So we drove a personal care mix above 50% of revenues, and that this helped increase fuel in the GP line. And we continue to invest back in CapEx that gave us an increased efficiency on the automation and supply chain side of the business, in addition to working on working capital initiatives that improve the business's operating performance.
So also, how has the recent VAT changes sort of affected the business? And what is the business's stance to sort of deal with these sort of sensitivities?
Yeah, so we it's still too early to say in terms of what the impact that will have on overall consumption. But in terms of the industry, we expect, like the industry has done in the past, we expect the industry to pass on the VAT increase, which is about 3%. We haven't seen that in the market yet. And this is largely because if you look at, we're in a commodity easing cycle, and typically when the commodity rallies, players exit the market, but when they ease, new players enter the market, and this really drives an increased competition in the marketplace. So price sensitivity is really, really important for us at this stage. So what we will do is we will do everything possible to retain our competitiveness and grow our market share, in addition to kind of really focusing on efficiency driving initiatives that we have done over the last year to enable us to be price competitive. So we think growth will largely really come from an improvement of volume driven growth and mix improvement rather than price growth.
Thanks, Sabrina. Moise, moving on to you. We saw this quarter had a substantial contribution from the learning segment. So how was this? Could you provide some insights into this learning segment?
Sure. Thanks, Hazel. One big windfall for this quarter from this segment is, the whole preschool and the back to school cycle that we get into, which this year, has a benefit to the business in quarter 3, and that has contributed significantly to the total consumer business growth during the current quarter that we're speaking of. In all the main segments that we're in, the mass, the premium, and the value for money, competition is continuing to increase. It is getting more difficult, but our focus remains to really put the trust behind what we are good at, focusing on the design, focusing on the premium segments such as the edu toys that we want to get into, and also sustaining the market share in the mass while investing further behind the new areas of premium and value for money that we are in. just a bit of guidance to you all, the kind of windfall that we're seeing in quarter 3, as impressive as it is, once the season comes to end, the same momentum doesn't continue into quarter 4. But it's been a very good quarter in the whole learning segment. Our targets and aspirations that we have set out for ourselves have been sustained, and it's about how we can keep further growing deeper into it, especially in terms of maintaining our market share, which, as you know, is we are the market leader in almost all the categories that we operate in.
Thanks, Moez. So Kasturi, we all know that Bangladesh is going through some economic pressure. Has this situation improved, and how is Hemas sort of navigating these challenges?
So Bangladesh is going through, I think, what we went through, and they're feeling the pinch, I think, as consumers, what we felt last year. And we see that in the market as well. Even though their inflation is over 9%, it's relatively low for us when we look at it. But in that region, it's a very high inflationary kind of environment for them. What we did was I think we had a benefit of learning from the Sri Lankan market and how we navigated, and Sabrina runs actually Bangladesh as well. So we moved to our pack sizes, we gave affordable propositions for consumers, which helped us to maintain and grow our share in the categories. We saw our soap category, which was actually a value for money product, growing significantly in the last year. But we have not stopped on our NPDs. What worked for Hemas HPC Sri Lanka actually did work in Bangladesh as well, and or the same ethos. So we launched the pure coconut oil. We saw that people were moving into pure CNO, and that was a Colombo brand oil, which is we say Colombo King coconut oil. That was launched last quarter, and so far we've seen good traction, but we'll see how it goes. So overall, while we don't see it going to ease off, the good thing is the team from Sri Lanka has seen what has happened, what we've gone through. We'll be focusing on what we're good at, and we will continue to look at some of the innovations.
Thanks, Kasturi, for that. So we also see that the healthcare situation in Sri Lanka still remains a challenge. So Dinesh, would you be able to tell us if there is any sign of improvement?
Yeah, thanks, Lisa. So I think when it comes to healthcare, the biggest issue, I think, is this low quality medication found in the market. There's a lot of disturbance into the government healthcare system. Therefore, the supplies to government segment has been reduced over the last 3 months. And as a result, still we see low stock situation in the government hospitals. Apart from that, what we've seen is there's a lot of shakiness in the system, and some cleaning up is probably happening as well. But the system has overall slowed down quite a bit in Q3. That we have our implications in our performance there as well. We see significant delays in registration from NMRA, accepting orders from the medical supplies division. So that's what we see in the government sector. When it's come to the private segment, still we see the consumers are moving more towards the low cost brands. Affordability is becoming still an issue. So we see volume contractions over last quarter as well. And the big issue that we are seeing in the system is a lot of migration from the consultants and healthcare workers.
Thanks, Dinesh. Also, considering all these challenges, especially in the pharmaceutical manufacturing arena we are involved in, how would you say that these difficulties affected the performance?
Yeah, so I think delays in registration from the regulator is a significant challenge, especially our pharma manufacturing business is more moving towards building a brand around a branded generic. So that's become a significant issue. Most of our files are waiting for registration. But having said that, the brands that we launched is doing quite well, especially the diabetes brand that we launched, Empamo, was continuously growing, and I think it has doubled its revenue over a year. So it's this thing. So I think we are moving in the right direction there. But having said that, the registration delays are a significant challenge. On top of that, the significant challenge was in the last quarter was government supplies. It has been over the last 2 months significantly reduced because of the system changes in the government procurement systems, which is hopefully things will be eased out in Q4. Things are getting back on track. On the other hand, we are focusing on some of the contract manufacturing opportunities as well. Some of the arrangement that we start are moving smoothly, and hopefully there will be a few more products that we will launch for contract manufacturing segment also as we move along.
Can you also give us an update on the progress that's in the Homagama factory, and especially regarding the utilization levels and how the factory's performance sort of affects the financials?
Sure. As much as we look at our capacity utilization, which is an indicator, definitely we are looking at. We are trying to look at the right mix for capacity utilization as well. So our government supplies are more volume driven, and in fact, we are running mostly with the government supplies in that facility. We touched about 50% of utilization, and we will end the next quarter again at 40%. There's a slight reduction in orders. So here we'll end at 40-45% of utilization. Having said that, we will have a increase in our branded segment, which will, even at a lower capacity utilization, it will yield a better yields. So that's where our real focus is. So that's basically on capacity utilization.
Thanks, Dinesh. So Kasturi, shifting our focus to you again, would you be able to tell us about our pharmaceutical distribution business? How has the industry being reacting to this transparency that's there in the pricing formula and so forth?
So while I think the healthcare system itself has its own challenges, the pharmaceutical business has been having this for the last 8 years, where you find the regulator not coming forth with the pricing formula, and that hasn't changed. While there's absolutely a lot of dialogue, they principally don't come to an agreement. But the impact to the industry is that in August, they took a price reduction, and what the industry had to do was write down all their inventory, which they were holding on. So today they operate at $292, I think, on pricing, which is a strain on the industry. What they have lobbied, and I must say the industry had filed another case just to ensure that they bring the formula back in. What they're lobbying is to get a transparent pricing mechanism, as always, as I mentioned. The second but the changes in the NMRA officials has again caused a delay, and it has taken a couple of steps back. However, they've appointed one of the older regulators back in, and we are hoping, because this gentleman, while he was running it, he was the credibility in that. I hope that things we see some light at the end of the tunnel. The second aspect is all the registrations. With all the changes and the health sector, in the government health sector coming under scrutiny, changes within the regulator, the officials, also makes everybody cautious. So I think the wheels have started turning a bit more slower. Anyway, we had a backlog on registrations and approvals and price adjustment requests and stuff. So that, I think, this quarter really we struggled. Hopefully, now that there is a new team in place, we'll see some more improvement in the next quarter.
Thank you. And also, if you can cover how these challenges have sort of affected our business in this particular quarter.
Yeah, so the healthcare, first time, I think, in the history of about 10-12 years, we've seen contraction in volume of pharmaceuticals from a public perspective, from a consumer's perspective. So under this, there's about the third quarter, you've seen contraction in the market, the market. Under this, while Hemas has contracted, it has contracted slower than the market, but which has been challenging for us, because when we see volumes under pressure like that, you have to see, you have to give the patient options which they can afford. Luckily for us, our portfolio has a wide breadth of products which you can supply. I guess what we are feeling most as a pharmaceutical business is the impact of inflation and the cost of operations, whether it's the fuel, whether it is the electricity pass through, and just the VAT impact going forward. I think we'll see something, but I guess that's where a sensible pricing mechanism has to come in, because when you operate under these conditions, it gives really strain on the system. I think what has worked for them is having focus on efficiency and making sure that we still drive automation and try to make more out of, extract more out of the business. We also as Hemas took a one-off hit on the, or it is gradual hit on the price reduction. Wherever you deplete the inventory which were imported, if you take a step back, during financial crisis, we needed to make sure we had excess stock in case we don't have dollars, and that comes to hit you. So that was an impact we felt during the quarter. Yeah.
Thanks, Kasuri. Moez, if you can tell us what are the focus areas for our hospitals and what are the developments we can expect in the future?
All right, starting off with, you can see there's a double-digit growth in the revenue itself of hospitals, which is quite impressive. And one good thing that we've seen in the hospitals in terms of operational efficiencies, the mix on the whole inpatient revenues, which, as you all know, it contributes to a better margin to the total business and services that the hospitals provides. Our focus on the anchor specialties, nephrology, cardiology, orthopedic, those remain, and we want to keep investing more in growing those particular segments. You all are aware that there's a few new lines we've got into, the ambulatory surgical care, and complementing those kind of services, which is all about a quick turnaround. The ambulatory surgical is a quick turnaround of the inpatients, and complementing that with services such as home care. It really gives a solution to the patient, not only from a spend standpoint, where you have a more affordable healthcare service, but it also caters to the whole requirement of spending minimum time within the hospital, going through completing their treatments in their more comfortable home environments. So that's a new line that we launched into. Our investment in digital for continued margin improvements remain, whilst we want to keep continuing more and more deeper into the whole anchor specialties that we're in. So all in all, it's been a good quarter for the hospital business as well, from both the top line, bottom line margins, and going deeper into our key focus areas.
Thanks, Moez. Kasuri, could you also discuss about the performance of our mobility sector and how it's already affecting our group's direction?
So, I mean, last quarter was good, but if you look generally overall, if you take a 12-month, the Port of Colombo had seen about 6% growth in terms of volume. Majority of that came in the last quarter. So there are a few things which are working for Sri Lanka. One is that, again, with the easing off of constraints on dollars, we've seen imports improving and cargo in and out seems to be improving. But more importantly, not within our control was the impact on the Suez Canal and the disruption there. So that Sri Lanka's viability as a central hub of distribution kind of came back into play. So the Port of Colombo had an increased volume during that call, and it still does. And that was not only for maritime, you see downstream into the container yards, the whole industry kind of got impacted, and it was good. But we also are seeing improvements, and because of the improvement in the tourist arrival, we've seen the aviation numbers moving up. We've seen the cargo export numbers in terms of air freight going up purely because I think the turnaround in Europe and US is just slowly starting, and that is reflected in the numbers. So last quarter saw a slight shift in the improvement and volume growth, whereas we systematically had seen volume degrowth. And for us, that was a positive change for the quarter for the sector.
Thanks, Kausturi. And Mohit, so looking at all these macro challenges, the market behaviors, would you be able to elaborate how these factors affected our profitability on a quarter-on-quarter basis as well as year-on-year?
Sure. Let me try and wrap up everything that has been said from a number standpoint, rather. Wrap it up from a number standpoint. You all noted some comments you made on operational performance. There was this comment on mix improvement in the hospital service, in the hospital side by the increase in the mix on the inpatients. There was also a mention of a lot of operational improvements, mix improvements happening in the consumer segment. And you're seeing all that being reflected in the revenue growth being there, both on a quarter and on a 9 months basis, but a higher proportion of growth happening at the GP line item. Again, you see that pattern both in the 3 months and the 9 months. There's a double-digit growth, a super double-digit growth on GP, whereas more conservative growth on the revenue side. It comes from all these operational improvements. Does all of that trickle down to PBT level? To a good extent it does, but not all of it. Reason being, the inflation pressure on our overheads takes its toll. Apart from the inflation pressure on general overheads, there's also the impact of certain new taxes that are coming to place, which are hitting the middle lines, such as the SSL cost, which is hitting our overhead line item. So the entire benefit of the GP doesn't trickle all the way down to operating margins. On the finance cost side, there's a significant improvement, which is coming from 2 angles. There's been an average working capital improvement over the 9 months, although you'll see some erosion during the December, which I'll touch on a bit later. But on average, working capital has been improving during this 9-month period. And of course, the benefit of the interest rates coming down, and we continue to negotiate hard on getting the most competitive interest rates, especially with the prime lending rates reducing. On the tax side, it's been pretty much in par with the whole PBT pattern. Another point to really reiterate is the contribution of the learning segment, which is again, the windfall you see in quarter 3 due to the school cycle of back to school and the school openings. That has had a significant positive impact on the revenue of the consumer sector, and hence the significant growth in profitability also in the consumer sector. Again, I'm just repeating myself in terms of all the operational improvements, the mix, the supply chain drives that we have been making, which Sabrina spoke of, all that is yielded a good return on the GP improvements, and hence the improvement on the bottom line, the consumer segment. Healthcare underlying has been good in terms of profitability as well. You will see a small dip in quarter 3. That's to do with what Kausturi also touched on in terms of the mandatory price reductions that we had to take, which has a supply chain impact down to the distributor side. On the working capital, something that I touched on a bit earlier, although the average working capital has been sustained quite well during the 9-month period, specifically for the quarter end, there is a working capital erosion, as in there's an increase in working capital, again, predominantly due to the whole growth in the Atlas segment, the learning segment during the quarter to service the growth in sales demand and the pickup from consumers. There is a natural working capital investment that takes place every quarter when we go through this cycle. So that's the reason for that. But if you were to exclude that, there's actually an absolute working capital improvement more than even 2 billion rupees. Apart from that, we maintained our optimum liquidity, and the financial status, the balance sheet, has been kept at healthy levels. As you can see, even our gearing, all that has been maintained quite well. Any increase in debt has been as a result of the acquisition that we made during the first quarter of buying the 25% of the learning segment. But The growth in gearing again is less than the investment that we made, which again is testament to the fact that there's been good improvements in working capital, and a lot of that investment has been funded to our own internal organic cash. So that's pretty much a sum up of the financial performance, and I'll pass it back to you, Hazel.
Thanks, Moise. So moving on to you, Shani, would you be able to give us an update on how our efforts in terms of the environmental and the social issues, and what are these initiatives we are having, and what is the impact of it on our business and also on the wider stakeholders?
Thanks, Hazel. So for during the third quarter, we introduced 4 new initiatives. I'm just going to spend some time explaining those for a bit. So one of the first things we introduced was Hemas Slingshot that we did in partnership with HAT. That the focus area was how do we support the startup system in Sri Lanka. So there we focused on fostering a new ecosystem where in Sri Lanka, where the businesses contribute to the essential infrastructure and capital. So we believe that investing in these startups will help Sri Lanka, and we are able to shape it to have an innovative and thriving future while we work towards empowering families to aspire for a better tomorrow. Then the second focus is our partnership with Satosa. As you know, one of our key areas is tackling plastic pollution, and we work with Satosa on focused on ensuring that we incentivize and promote responsible consumption habits to the consumers that come to Satosa. Then we also continued our focus on creating a safer world for children, and we did this through Baby Sharami, where we launched a guide booklet in educating parents on prevention of home accidents, as well as Hemas Outreach Foundation launched a nationwide campaign. This is one of the first campaigns to be launched to educate preschool children to safeguard themselves against abuse. All these, both these initiatives are done in partnership with Sri Lankan College of Pediatricians. Then on top of all of this, we also focused on continuing our purpose initiatives. And through those initiatives, we touched 62,000 families across Sri Lanka. So that's it from me.
Thanks, Ishani. Moving on to you, Rizni, would you be able to shed some light on what are our corporate and business M&A priorities that are there, and any future developments, and what we can anticipate in the quarters to come?
Thanks, Hazel. So it was that time of the year where we sat the businesses down because our long-range plan, which we kicked off in 21, ended in 24. So as a group, we took a call from 24 to 27. We wanted to understand what kind of choices the existing businesses had made, and also to understand the growth potential. So what came out of that exercise is, I think, the historical performance was touched on, but in terms of the existing businesses itself, we see a early double-digit growth over the next 3 months, which comes from the existing businesses. But of course, that's a lot lower than our group aspirations. So that was the target that we initially gave these businesses when they started out with the process. So what we've done for that is, in terms of a kitty for new investments, both organic and inorganic, we have identified a little over $100 million over the next 3 years. I'll spend a little bit of time to explain how we're going to prioritize our investments. In terms of the investments itself, as and when these things materialize, we will disclose it given the sensitive nature of these transactions. So the first priority would be in terms of Forex earning probability. So if you look at our existing business portfolio, that will tell you that that's an area that we're obviously looking to strive towards, and that will be priority number 1. In terms of priority number 2, as Sabrina alluded to, we're looking at categories in Sri Lanka. So we do have strong brand positions, but there are categories that are underpenetrated, and Sandap was one such category which we've done relatively well. So we will continue investing in categories within the healthcare and consumer segment. So on. The third thing, and this is not just in Sri Lanka, it's also in Bangladesh. So there again, a little bit of a renewed focus in terms of investments will be made over the next 3 years. Thirdly, there are a few categories, even though we have market leaders across, there are a few categories, subcategories where we are not number 1 or 2. And especially in Sri Lanka, that will be a key focus over the next 3 years for us.
Thanks, Rizni. So we'll now open the floor for any Q&A. We have received some questions, so let's move on to that. Sabrina, I think there is a question which reads, what is the penetration of sanitary napkins in the local market? And also, could you comment a bit on the distribution channels that are there in the rural areas?
Sure. So the penetration of sanitary napkins in the local market is actually appalling. It's only 30% of women use a sanitary napkin, which is ostensibly an essential product, on a monthly basis. So there's a lot of room for category growth in this segment. In terms of distribution, I think, so we've actually widened the net from traditional distribution channels. We go to about 80,000 outlets and we take our products through them, but we've widened the net in two ways. One is we go directly to schools with our products, and we partnered with civil society organizations to ensure that this product actually gets into first-time users. So we've touched about 45,000 school children through this program. And secondly, we also employ a model of community setting. So where we have a group of 200 women that go house to house and educate women about this product and why they should use it. And so, for us, we find that because the act of buying a sanitary napkin is stigmatized in a retail outlet, we really feel that to increase penetration in the category, particularly in rural markets, we need to go directly to the consumer herself.
Thanks, Sabrina. Isuri, we will now give you the chance to pose your question.
Sorry, this is Naveen from Linear. I'm just logging in from Isuri's account because I got too late to register. Just a quick question. I'm just trying to understand the quarter-on-quarter 12.7% drop in HPC in Sri Lanka. Now, when I look at your numbers historically, it looks like Q3, there's some element of cyclicality, and Q3 appears to be a stronger quarter for HPC. So this drop, is that all coming from volumes, or did something else happen as well?
You're talking about, Naveen, you're talking about the HPC revenue?
HPC revenue drop, Sri Lanka, Q2 to Q3.
Talking about the consumer learning.
Consumer, it's a consumer business.
Consumer.
That's probably also because of the back to school.
No, I'm excluding, if you exclude Atlas and just look at HPC.
There's no quarter drop, right? There's
Slide.
no quarter. Right. So the revenue drop, okay, the quarter-on-quarter revenue drop is we took certain price reductions in October from on HPC, and that was reflected in the month of third quarter. But our volumes increased, so I think reflectively it has not, you've seen a drop, but the price reductions we gave to the market were much more. That was
so if you look at volumes in Q2 versus Q3, what you're saying is in HPC Sri Lanka, there's actually a volume growth, is it?
Underlying business has grown. I mean, the volumes have grown. The number you're talking about is reflective of the price.
Right.
There's another question. Kasri, if you can take that, please. What was the one-off impact from the price reduction on the healthcare EBIT number? And they say appreciate some color here on this.
I think I can take from a group perspective. The one-off impact might be just about 1%.
Yeah.
About 1% of the group number. The color is, I mean, it's just when you price mark inventory, which you sell as and when you sell, and it was quite a bit of a sale in the last quarter of the inventory, which was imported at a higher value and had to be price marked down. So that was basically what it is. We also maybe, that's the only one-off we have had in the quarter, yeah.
Correct. And if I can just add in a bit to that, there's also context of the same price impact that affects us adversely in this quarter, gives us a benefit in the previous year because of the price increase. So there is an upside from previous and a downside in this year, and hence the variance of both is there as well for you all to consider in terms of the last or this year variance.
So this is because there is no pricing formula. Now it's like fuel, it's weekly when it changes. Here you go with lag effect for about 6 months before somebody does an adjustment. And the pharmaceutical industry by design, and because Sri Lanka is a small country in terms of the whole world, we have to hold about 3 months of inventory to 3 to 4 months of inventory. And during crisis, you kind of take calls of holding more. But so in that kind of environment, and the fact that you don't have a pricing mechanism, either you, when you have a price increase or price reduction, you get a windfall, or you take this hit.
Thanks, Kasturi. And Dinesh, there's a question on the Homagama plant utilization. In the it reads, may I know capacity utilization of the Homagama facility? Said 50% government, what about the rest?
Yeah, so what happened in Homagama is we are in the process of increasing the capacity utilization of Homagama. So what happened in pharmaceutical manufacturing, there's a period of where you start your R&D until you complete the full research and then file the registration and getting into the commercial operation. So there's a period. So at the moment, mostly the 50% of capacity utilization which is occupied is the government business, but NPD pipelines are being filled and we are working on it. So as soon as the registration comes, utilization will further increase. As I explained, the difference is now as we are moving into more branded generics, which will high price and high margin, which will even at a lower capacity utilization, the yields would be much higher.
Thanks, Dinesh. Sabrina, if you could help us with this question, it reads, does the Thailand FTA pose any threat to any of the products in the brand portfolio? Conversely, with Thailand being a bigger market, are there any possible growth opportunities?
Yeah, so the assumption we've taken in the business is that trade barriers will come down over a 3 to 5 year period. And so for us, we look at essentially making our portfolio defensible in 2 ways. One is we are investing, continuing to invest behind localizing our brands to ensure that they cater to local needs and preferences. So limiting the threat from other regional competitors coming into the market. And secondly, we have also benchmarked our business against regional players. And we are investing early in CapEx, productivity-led improvements and automation to ensure that we can meet efficiency standards that is required in order to compete.
Thanks, Sabrina. Kasturi, if you could help us with this question, VAT exemption on stationery has been removed, and what would be the impact going forward?
Yeah, so there is an impact. I think there is an impact right around the value chain from a distributor to the retailer. We still haven't seen the impact on the offtake because the back to school season just started. January, when you look at it, even though it's not relevant to this quarter, the quarter we are talking about didn't see it, but the offtake for now, we don't see see a huge impact, maybe because relatively some of the inflationary pressures seem to be low in the consumer's mind. But I guess there would be some kind of impact. But from a business perspective, what we did do is we also, if you recall last year, by August, September, we launched a value for money brand, Home Run Fast. I think if you look at reflection, that category, that brand is doing really well this season. So maybe any fallout would have been traded, people would have traded down into a PFM brand there. But obviously there'll be impact there.
Can I just add in a bit? As Kasturi said, yes, there would be a natural direct impact. But the question is, given the portfolio that we have within the whole learning segment, how we can mitigate that. And managing the portfolio, managing price adjustments where it's possible, managing certain discounts that we give to the market, the business is confident that we can mitigate this impact to the bare minimum. But if not for that, yes, there would be some impact.
Thanks, Lois. Naveen, do you still have more questions? Apparently the hand raise signal is on.
Yeah, I have one. Kasturi, I think according to the disclosure made to the CSE, will be stepping down 31st of March. Has there been any discussions or in terms of replacement on the senior leadership side, anything that you can comment on?
Yeah, so we are still on the search of a CEO, and we are like, maybe we would have some answers maybe in a month or two. However, the way the team is, and you saw Rizmi did explain, we've got, if you look at our business, you have the core and you have the new areas and the new within the core. The team has just done the next 3 years LRP, and the consumer and healthcare teams have signed off. So from an operations point of view, the clusters will run for the next couple of months. They're independent. They've been running independently, and business-wise, that operations will go through because there's clarity of direction. They've clarity of how they're competing, and the plans have all been signed off by all of us at the board. On the replacement, particularly, we haven't got, but what we have got is an interim arrangement where we would have the group affairs managed by the chief people officer, who would take over most of the people related and senior issues. But we've got a very the advantage we've got is we've got a BOM which is very close and we collaborate quite a bit. So that same unit would be looking after working with the CPO to run the business for the next couple of months.
Thank you.
Harindi, would you also have a question?
Yeah, hi. So this is regarding HPC Sri Lanka segment. So based on your investor presentation, it was mentioned 9% volume growth for 6 months and 6% volume growth for the 9 months ended December. So does this mean that there's a volume growth for 3Q? And on the other hand, you all mentioned that personal care segment saw volume growth. So does that also means that the home care segment have seen a considerable volume drop? And could you also brief how would you see the current volume trend based on what you hear at the ground level?
Okay, I'll take that. So I'll start with the last question first. So in terms of the categories, we're actually still seeing marginal decline. We don't know what the impact of that and its impact on the overall category decline. But we think, things like public sector salaries and improved harvest could end up negating some of the downsides that you see from the taxation. Still too early to say. So, but we're cautiously optimistic that we will start seeing volume growths in the categories starting from Q1 onwards. And as I mentioned earlier, I think industry players are also being really cautious about pricing adjustments, and this should also help kind of build volume-led growth. In terms of our laundry portfolio, the category is actually still close to double-digit decline. So we are declining marginally less than category.
I think one other aspect you asked about the third quarter, I think it's quarter on quarter. When we report, it's quarter on quarter. Year on year. So on year, we've had growth.
That's
So
okay.
thank you,
There's
that's explained.
one last question that's coming in. What are your thoughts on the competitive dynamics in the market? Is it fair to assume that HPC and Atlas to some extent benefited from the lesser availability of imports and market in third quarter? Do you see competition intensifying in the coming months?
So I'll take that from the HPC and then pass over to Kasturi for Atlas. So on the competitive dynamics, as I said, when commodity cycles ease, particularly in commodity sort of dependent categories like laundry and skin cleansing, you typically see an influx of new players coming into the market. So this has meant that because we're on a commodity sort of easing cycle, there have been new players that have come into the market, which is why, it's really important that we stay competitive in the discount segment, and we've done a lot of innovation to stay ahead of the curve on that. Secondly, in terms of the HPC business benefiting from the import ban, that is not really the case, because our main competitor also manufactures in Sri Lanka, and so we didn't really none of our sort of portfolio categories really compete head on head with imported products. So that wasn't really something that gave our business an advantage.
So on Atlas again, I think the question is, are you at a relative market share where this would have a big impact, and who your consumer is? So even in learning segments, it's about a trust of the brand, and in the color and back to school products, it's about trust in terms of toxicity and stuff. So that's where our products really differentiated. And even though our premium products are there, people do buy it, and they command a huge market share. It's plus about 60 or plus percentage. What we did was bring in the value for money product, not compromising on quality, just maybe the kind of frills we give in and were kind of reduced. We do see that there are import market segments, but products coming in, and for us, it doesn't impact our customer. It might impact the competitors. And we will continue to, make sure our product quality and brand is something it stands for in terms of quality and fun for the consumer. So I don't see a threat at all on that for us.
Thanks, Kasturi. So we actually answered all the questions that are there. And any closing remarks?
For me, just the closing remarks. It was a pleasure being with you all for the last 3 years. I must tell you, the first 6 months was horrendous for me because it was something I was new to. And thank you for having the patience in indulging me within those 6 months. This will be my last call, but appreciate your support on Hemas. And one thing I can vouch is you've got an excellent team, which is I was just the figurehead. They ran it, so that will continue. So the numbers would chug in, and thanks for your support. Keep investing in us. Thanks.
Thank you, everyone.
Thank you.